Crude oil prices have definitely been in the spotlight as they tested that level of $75 a barrel. Let's connect with Mr. MK Surana, the former CMD at HPCL, to talk a little bit more about the crude oil price trajectory as well as the implications on some of these companies and the demand situation. Mr. Surana, thanks so much for taking time out. Given the kind of demand concerns we've seen owing to the fall in U.S. banks and the high inventory levels, we've seen crude oil prices been vacillating quite a bit, and they've dropped nearly 13% from the recent peak. I just wanted to get in your thoughts on how crude oil prices have been moving.
Good morning to you. As you rightly said that in last 2 days, there was a fall in the crude oil price. Almost it came below $75 level, and today it is hovering around 75. And the reason is obvious that two things. One thing was a hawkish Fed commentary, some data on the inflation, and of course the turmoil in the banking system, which gave a concern. Of course, the positive side was the China demand picking up and the optimism about that, but little bit of uncertainty regarding how fast and how quickly the demand in China picks up. And that has led to little bit of cautiousness on the market, on the part of the traders and the speculators. And that has led to the fall in prices. But in a larger commentary, if we see the most of the inputs are digested in the crude prices, which has brought it steadily down from a high of 127 to let's say 80, and for some time it was hovering between 80 to 85. But I think that it is now veering more towards 75 rather than 80 to 19 trajectory. Maybe there will be momentary spikes because of the news flows coming on day-to-day basis. And going forward, it will be seen that how fast and how quickly the demand picks up. But I see that it is trying to settle more towards 75 rather than above 80 now.
Mr. Surana, in India, despite the fall, OMCs have refrained from changing retail fuel prices, right? This is also because they have suffered huge losses earlier and they're now trying to recoup the same. How long do you really expect this to continue?
Well, in fact, the reason for OMC is to keep the prices constant for almost now more than 7-8 months, even when the prices were very high. And that the obvious reason were debated substantially in the media and otherwise also to control the inflation, to insulate the consumers against the volatility of day-to-day changes, etc., etc. But at the same time, OMC have also suffered a little bit because of this, and their bottom lines have got hit, as we have seen in the quarterly results which came earlier. And therefore, there will be a reason for them to hold the prices even if it goes below, to at least recoup part of the things. And therefore, I think it is reasonable to expect that there may not be a sudden fall in the prices just because the crude prices are falling. That is one thing. But the second thing, we also need to be conscious that while the crude prices have fallen a little bit, the cracks have not fallen to that extent, though it came down from a very high level, which was there in between. But still, the diesel cracks are somewhere around $26, or MS cracks are somewhere around $16, and the dollar prices are high. So I think we should expect the prices to remain in this level for a little bit more time before it comes down. One more aspect which we should remember that while the crude prices come down only in last 2-3 days, but the prices are determined based on a rolling average of 15 days, and therefore it has to remain at a lower range for a longer time to see the impact of it in the pump prices.
Mr. Surana, so what should be the right spirit when fuel prices, when crude prices, they went higher? Oil marketing companies had to play the role of a good corporate citizen, and then they were subsidized. Now oil prices are going lower. Do you think they should be allowed to make profit or they should pass it on? What should be the right spirit?
Okay, in absolute terms, if you ask me, it should be purely market determined, but that is a perfect market and the perfect social system. But we are not in a perfect world, let's accept it. And therefore, there will be regions which becomes uncomfortable both on a very low side as well as on a very high side. And therefore, we should expect some sort of moderations in the price levels and not remaining perfectly market driven whenever the things are going out of the boundary. I think the right spirit will be that in a range, it should be purely market driven. And if it is beyond the range, there can be modulations, but every high level modulation done, which will impact the OMC, should be compensated by a lower regime moderation again. I think that will be the correct way to go.
Okay. Refining margins, inventory loss and gain. So while we can focus on one part that oil goes down, it's great news. But on the other side, there are inventory adjustments. There is going to be change in refining margins. So good will cancel bad and bad will cancel good. Bottom line, nothing changes incrementally for a shareholder.
I can't say that, and I should not say that also, because all said and done, there is a steady. If we leave aside the last 3 quarters, the oil companies have made profit consistently. Let's accept it, and the profitability has not been bad also in last few years, if you say that. Now, the total sum is a combination of refinery margins, the inventory gains loss, the marketing margins, the market moderation, supply demand, everything put together. But the oil prices, if they are continuing to be the same range, if the cracks are remaining to be in the same range, then what is changing? The changing is the inflation and the normal pricing level. So the profitability growth comes by the expansions, by the efficiencies, by the cost optimization, and that is what the companies have been doing over a period of time. So there had been expansion, there had been cost efficiencies, there had been optimization in the operating costs and the logistic costs and the way of processing, the lower carbon processes. Now, the negative impact also came because of we have got more and more stringent on the product qualities, and every improvement in the product quality actually costs money in terms of OPEX, in terms of CAPEX. And therefore, to say that there is no gain to the shareholders won't be correct, because over a period, India has definitely built up its refinery capacity, and that has come not by generating additional share capital from the market, but by plowing back the money which has been generated by the oil companies themselves. So, and they had been giving the dividends to a reasonable extent. Now, the pure market capitalization is a function of many things which you know better than me. But I think in an expected return basis, I think the oil companies have not been bad for a long-term investors. And as far as inventory gain loss are concerned, over a period of time that actually get adjusted, because these are more the book losses and gains which we have to book because of the period ends coming in between. Had there not been in period end accounting, then probably the inventory gains loss will make no impact at all.
Okay. So, Mr. Surana, let's address purely from a shareholder standpoint.
Yeah.
These stocks are cheap. They're trading at P multiples of sub 10 times. Dividend yield is strong. What should shareholders expect now from here? Investors, shareholders, investors. I mean, the last shareholder is government, so I'll keep that part aside. Let me interchange the word shareholder with investor.
Okay. So let's talk about leave aside the promoters and the government, but let's see the normal shareholders. I think the last few months or let's say year or so had seen a substantial turmoil in the oil sector. But the worst seemed to be over, because the oil is not looking at going above 100 or even 90 now. The cracks are not looking at going to $70 or $60 or something like that. The cracks are not going to a low of $2, $3, $4 also, which we have seen. So I will assume that the refinery gross margins will be in the positive territory, and $15 to $60 cracks is a good and reasonable cracks on MS and HSD. If that is maintained, then the refinery margin should be reasonably good. The second part is, if the crude prices hover in the range of 75 or 70 to 80 range, and the cracks are in the range of, let's say, 14, 15, then the marketing margin should also be healthy. And therefore, I would expect that from here onwards, the oil companies should be able to do better than what they did in last 3 quarters or so, which had been not so good because of various reasons, predominantly because of the under recoveries. And if the dollar is also stabilizing, which appears so, in that case, I think that there is a reason for investors to be happy going forward. That's one aspect. Second thing is some of the companies which will be adding the capacities that should help. The LNG prices getting moderated should help in also the oil gas switch which was happening, that will also get a bit more stabilized. So I think the worst part is over and future we should be looking better now.
And always a pleasure chatting with you. Thank you so much for joining in today.
Thank you. Thank you so much.
Okay.